Hello traders, you're welcome back to the Forex Geek channel. In this video, we are just going to be quickly discussing the stocks scalping strategy, okay? And this strategy can help you make quick moves in the stock market and potentially see results in just a few minutes, okay? Now, scalping is all about executing fast trades based on small price movements, and it is a strategy that is becoming increasingly popular for active traders. All right, but before we get started, don't forget to hit that like button if you find this content helpful, and make sure to subscribe to the channel so you never miss out on more trading strategies and insights. Okay, now let us just jump right into the stocks scalping strategy. Okay, we need to understand what scalping is about, right? So, what exactly is scalping? Well, scalping is a trading strategy where traders look to make small profits from tiny price movements over very short periods. Okay, the goal is to enter and exit the market multiple times throughout the day. You can literally be attempting to catch every single wave. As a scalper, you want to catch every single wave if possible. Now, of course, and I had to add if possible because in some cases it might not exactly be possible, right? But so long as you have a solid strategy, at least you could catch majority of the moves, right? You could actually catch majority of the moves. For example, if you are in a bearish trend, right? If you are in a bearish trend and you have a solid strategy, you might be looking to catch all the bearish moves within that bearish trend. You can catch the move from here to here. Then after a pullback, you get a confirmation, you catch the next impulsive move. After a pullback, you catch the next impulsive move. So basically, as a scalper, you want to take advantage of every possible move. All right, let us add possible there. Let's be very realistic. All right. Now, scalping is usually done on short time frames, obviously, such as the 1 minute or the 5 minute charts, which allows you to spot quick price action. The main idea here is to make many small wins throughout the day instead of trying to capture large moves like swing or trend traders. This can be a great way to build consistency, especially for traders who are comfortable with fast-paced decision making. All right. Now, when it comes to stock scalping strategy, the time frames you choose are crucial. All right. The most common time frames used by scalpers are the 1 minute and the 5 minute charts. Now, these time frames allow you to see quick price movements, which are essential for scalping. All right. The idea is to get in and out of trades before the price has a chance to reverse or go against you. Now, it's important to focus on short-term price action. Look for support and resistance levels that are being tested. Now, what I'm going to advise is that you go to a higher time frame and get your levels. Right, you can go to 30 minutes time frame, for example, and look for support and resistance zones on the 30 minutes time frame. You plot your levels, areas where price got to and got rejected. You plot those levels on your 30 minutes time frame. Once you're finished plotting those levels on the 30 minutes time frame, you can go back down to the 5 minutes time frame and look for opportunities on the 5 minute time frame. Now you can see what I'm doing right now. I'm trying to plot levels of support and resistance on the 30 minutes time frame. And after that, I'm going to go down to the 5 minutes time frame and look for opportunities. And now what you have to do, first of all, is to identify the prevailing trend in the market. Now we can see that currently we are in a bearish trend. Okay, we're actually in a bearish trend here, and then at some point we got a breakout to the upside, and then again we can see that we started a bearish trend again, because you can see there are a series of lower highs and lower lows. So what we're going to do right now is go back to the 5 minute time frame and look for opportunities. All right, now we are in a 5 minute time frame, and you can see that there was a rejection around here, right? So what you're going to do is that once price gets rejected from the resistance, this is a sell trend, right? So you look for only sell opportunities for high probability trades. So once we get a good rejection from the resistance, bearish confirmation candlestick pattern, we can go ahead to enter our sell trade, stop loss above the swing high, just recent swing high. Take profits can be around support zones, because this is a sell trade. If it was a buy trade, it's going to be resistance. All right. So basically, you should also be looking out for a good risk to reward ratio, at least 1:2. Now, in addition to price action, you can actually decide to make use of indicators such as moving averages, RSI, Bollinger Bands, they are also good. Okay, you can actually combine price action, support and resistance zones and all of that. You can actually combine it with technical indicators as well. All right, moving averages are great for identifying trends, smoothing out price action and all of that. 50 period and 200 period moving averages are often used in scalping strategies. RSI is also a common technical indicator that helps to spot overbought and oversold conditions. If you're scalping, you can use an RSI with 14 period, period of 14 or less to find stocks that are either ready to reverse or continue their price movement. Bollinger Band is actually another popular indicator that expand and contract with volatility. It's another popular indicator that expands and contracts with volatility, right? So whichever indicator you decide to use, whether you are using the Bollinger Bands or you are using the RSI or you are using the moving averages, just ensure that you always get confirmation. It's very important, and do not neglect price action. In fact, I'm going to recommend that you prioritize price action over technical indicators. So you watch out for your resistance and support zones. You watch out for your candlestick patterns. Getting bearish rejections, bearish candlestick patterns around resistance is a good signal. Getting bullish rejection patterns, or rather bullish candlestick patterns, bullish reversal patterns around the supports is a good signal. So when you get a bearish candlestick pattern around the resistance, the sign to look for sell trade, especially if it's in a bearish trend. And when you get a bullish candlestick pattern, a bullish reversal candlestick pattern around the support, it's a good time to look for a buy trade, especially if it is in a bullish trend. Now, scalping can be very profitable, but it also comes with its risks. And that is why risk management is absolutely essential. One of the most important aspects of managing risk in scalping is setting stop loss orders. All right, a stop loss is a price level where your trade will automatically close if the stock moves against you. Okay, preventing you from losing more than you are comfortable with. Another way to manage risk is by defining your position size. In scalping, the goal is to make multiple small profits, so you don't want to risk too much on any single trade. Typically, scalpers risk 1 to 2% of their account balance per trade, which allows them to survive a series of a series of losing trades without blowing their account. Then take profit orders are also important in scalping. These orders automatically close your position once your target price is reached, ensuring that you lock in your profits before the market reverses. Now that we've covered the basics of stock scalping strategy, it's important for you to know that having a solid plan in place is crucial. You should know what indicators you are using, know what time frames you are trading on, and know how much risk you are willing to take on each trade. Scalping requires a lot of focus and quick decision making, so make sure you practice on a demo account first. If you are new to the strategy, as you gain experience, you'll start to see patterns and develop a better sense of timing for your trades. Now, to wrap it up, stock scalping strategy is all about making quick, small trades to capture price movements in the market. By using the right indicators, working with short time frames, and managing your risk effectively, you can improve your chances of success. Remember, the key is consistency and discipline. If you enjoyed this video, be sure to give it a thumbs up and subscribe to the channel for more tips on how to improve your trading. Drop any comments or questions about scalping strategies below. I look forward to seeing you in the next video. Happy trading.